Hi, I'm Tracy Sofra and I work with career-minded professional women. And for too long, women have been told they're not good with numbers, they can't manage money, and one day someone's going to finally rescue them. And I'm here to dispel that myth once and for all. So today we're going to finish off on our cash flow piece by learning how to master our cash flow. And you know, the word mastery is a big word given, and it's not easy to master something that is relatively new and something that you're trying to get your head around. So I totally get that. What I don't want this to be is a process or something that it kind of you have a go and it puts you off and you think to yourself, I'm no good at this, I may as well just keep doing what I'm doing. And I guess that's what I don't want to happen. So I'm very mindful of the way that I use my language in terms of making it available for everyone to get their head around. So money mastery, you know, yeah, it's a big word, but all I'm saying is this. We need to learn how to structure the money that comes into our household in terms of our bank accounts. And that's what I'm going to be talking about today. How to master this. What are the steps? What's the strategy? How do we make this work? Because it's not something that money is not a skill not taught, and it's not something that people teach us on a day-to-day basis. And this is the stuff that I talk about on a day-to-day basis over the last 30 years with so many women that I've worked with, and it's changed lives. And I guess the one thing that I can say to you that all of them have said to me, Trace, it's so simple. It's the simplicity that eludes everyone. Everyone's waiting for the most complicated of strategies. Something, it must be so hard. That's why everyone's not doing it. It's actually the opposite. The simplicity in it is the thing. And that's what eludes everyone. So if I can just quickly recap. I started by sharing the cash flow patterns of the poor, the middle class, and the wealthy. And I wanted you to identify, firstly, to understand how it works. And I spoke about money trees and money pits. And then I wanted you to go back and recognize which one of those was representative of you and what you were doing. Did you identify with living hand to mouth? Did you identify with buying toys to impress people with money that you didn't have? Was that you? Or were you already, or are you already putting a certain percentage of your money, your hard-earned money, every single week that you work for, away in a separate account? From there, we moved on to knowing our cash flow. What is our cash flow? And that basically was the ugly word budget that we renamed cash flow analysis, and decided we were going to have a look at the ins and the outs of our money within our own little kitty. Now that should have brought you to a point where you've gone, oh my God, or gosh, this is looking really good. We've got a bit of excess there. So at this point, you need to be really mindful of what your next steps are going to be. If you're in negative, you're going to need a little bit more help than what I'm about to talk about right now. And when you are in negative, don't panic. It's not panic stations. It simply is a time to review every single expense that's there in that cash flow analysis and start scrutinizing each one of those. Are they a necessity? Are they things you forgot about? This is the perfect time to go back and analyze every single aspect of your financial life, and it either stays or goes. So I'm guessing that's going to be the next step for those of you that have found that you're in negative. For those of you who are in positive, what you need to now do is structure that income into ideally 3 different bank accounts. Why? Well, firstly, life gets busy. And as I've mentioned before, we are so many things to so many different people. So we need to set ourselves up for success, not failure. Because if you leave this crucial point or this crucial step in your own hands to deal with on a weekly, fortnightly, however you get paid basis, 9 times out of 10, you're setting yourself up for failure. Why? 1, lack of time. 2, lack of discipline. As I mentioned yesterday, there's always going to be something else that gets in the way, and you're always going to put yourself off for something else that you view as being more important. But nothing is more important than you and your future and your options and your choices and the freedom that we so crave and desire. So take the onus out of your hands, set up a structure that just happens without you even thinking about it. You know the interesting part of all of this? You will learn to adapt to the new amount of money that you've set aside for yourself to live off. So let me talk about what that looks like. Once you've done your cash flow analysis and you know what your cash flow is, it's time to set some goals in terms of where that money goes into. Simply put, if you are putting your income, so if you're a wage earner and your wage is going into one bank account, I've probably seen in the 30 years that I've worked with people, 3 maybe, that can do that are incredibly disciplined, that understand money and can actually make that work. 99.9% of everyone else can't. So don't. My recommendation is, my tip for you today is split it into 3. And what are the 3? The first one is the pay yourself first account. Remember, we come first. We need to put that aside first. What does that generally look like? Rule of thumb, minimum 10 to 30%. I'm going to come back to that in a minute. That goes off into an account that is siphoned away for future investment. Yes? Account number 2 is the bills account. This is the account that you put money into, again, depending on weekly, monthly, fortnightly. This is what you're going to live out of. This is all of the ongoing expenses to live out of. This is the account that's going to make your life in terms of bills and groceries and all of the things that we need to live off really easy, because the money's always going to be there. Account number 3 is your spending account, your guilt-free spending money. How easy is this once you implement this? And when I talk about mastery, I don't want you to be despondent if it doesn't work the first time or the second time or the third time. You must keep trying. It's a structure, do, review, and come back again process. Nothing happens the first time we do anything, right? It just doesn't. That's not how life works. How life works is we have a go. If we fail, we go back, we review, we reflect, and we have another go. That's how we master things. We don't master things in just one hit. So don't be despondent and don't let this put you off. If you don't get it right the first time, you must continue to try. You must go back to the drawing board, review your cash flow analysis, get to know it a little bit better, and then have another go. And it's all about the tweaking. So when I'm working one-on-one and we're going through this process, I will generally say to my clients, here's what we're going to do. If we've got, say we've got an excess of about $5,000, which is about, say, $100 a week, we set that $100 a week to go into the pay yourself first account, because what the analysis has shown us is what we need to live off and a little bit of pocket money left over. When that $100 goes into that account, I often say to clients, let's go away. You need to go and live this. And then you need to come back to me and let me know, is it working? And if it's not, we need to go back to the drawing board again. So the proof is in the pudding. The proof is in the living. The proof is in the doing. You've got to do this stuff, and you've got to review and reflect and then set again if it hasn't worked. The structure is 3 accounts. Pay yourself first, 10 to 30% siphoned into another account for future investing. The bills account, which takes care of everyday living, and then your guilt-free spending account, which you can blow every single week, fortnight, monthly, that is not going to impact your future self, your current living standards, and away we go. And it is that simple. Believe me, it's that simple. And what you're going to do, you're going to find that all of a sudden, you're going to become so possessive about this investment account, this future self, pay yourself first account, that you're not going to want to dip into that. Because a lot of the time there's a bit of resistance when I work with clients in this area. And what I generally find is they're kind of almost like, what if it doesn't work? It's okay, because you know what? What's the worst thing that could happen? You end up with a few $1,000s in this account. You can grab that back anytime and bring it into the main account, can't you? No love lost there. It's just sitting there. What's the worst thing that could happen? But you're going to get possessive with this account and you're not going to want to dip into it, I promise you. And we're adaptive creatures. We are designed to survive and adapt. This is what we do, right? So this bills account, you're going to learn to live within those means. All of a sudden, your subconscious mind is going to refocus itself to that. And that's what you're going to adjust to. Over time, you'll find this is exactly what's going to happen. And what you're going to think is, oh, God, that was so simple. I didn't even miss that amount. How did I live before I did this? It's astonishing. In my future videos, I'm going to share with you what to do with that money in that account, because that's for future investing, right? You've got to pop it away first. You've got to have it to invest. You can't invest if you don't master your cash flow. You can't invest if you don't understand cash flow, know your cash flow, and then master it. And the final piece today is about reviewing it. So the reviewing piece is incredibly important because life changes. So we have job losses, which we've got so much of now. So what a better time to review our cash flow. We've got divorce that happens, we've got death in families, we've got all sorts of things that happen. And for these reasons alone, we need to review our cash flow minimum 12 monthly. And again, every single time a major life event occurs in your life, there needs to be a review of this situation. So there it is. Cash flow. Cash flow is where it all starts. If we don't get our head around our cash flow, our single most important ability in life is to earn this income. And what you do with that will either set you up for the future or not. Your choice. Money comes in and goes out one hand every single week, fortnightly or monthly. What you choose to do with that is completely in your hands and in your control. And there's no time like the present to look at this, to review this, understand this, and get our heads around it so we can move on to the next lot of steps. Pay yourself first. Siphon it into a separate bank account. Get your payroll officer to do this for you. Go to the HR department and get it done. And it's that simple. There it is. I'm Tracy Soffra. I work with career-minded professional women. Please like my page so you get notifications when I'm on every single day. And please register for the early release of my program that's coming really soon. You'll get early access and you will get all of the resources and all of the details and all of the complete program at your fingertips over a 12-month period, and you can do this in your own time. I'm looking forward to sharing this with you. Have an incredible day. Bye-bye.